The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 28th day of January. Just about to wrap up the month of January. Had a spectacular month, giving back about 400 points right now in the Dow. We'll get the numbers up in a minute. You've got a black chart looking at you at this particular second. And it just reboot minutes before the program. It should be coming up very, very soon. So let me just talk about a couple of things. Within the Chapman wave methodology, we've already had a leg E, possibly a peak E today in the daily chart of the Dow. You've got at least a D in the NASDAQ. You've got that in the New York Stock Exchange. You've got the only missing ingredient is the SPY, the S&P 500, which went to a peak C and then just missed a D. I always look for that fourth highest peak in the Chapman wave methodology. And that's certainly a buy signal that goes to a buy mode, should always get to at least a D, and then you can have some kind of a pullback. That's where other things can happen at that fourth highest peak. The Dow right now is down 385 at 24,352. The S&P is down 37 at 2627. The QQQ, if I can sneak over there, is down 3.23 at 161.92. So what we're looking at here is quite a heavy sell-off. The SMH is the I've been talking about this for a little while, saying the semiconductors to me are still the laggard of the sectors. They're going to be the clues to what's going on next. And that's what's really important is that they had a big spiral the other day on supposedly great news from Lam Research and what was the other one? Lam Research and LRCX and Applied Materials. And in fact, the earnings are really going to be very poor. But the buyback, $5 billion. Lam Research said $5 billion. I mean, that's billion. That's one of the biggest buybacks that I can ever recall. I don't know what they're trying to do, but if they're trying to boost the stock, I guess that's one way to do it. But the most important aspect that we're looking at here is that within the context of the markets, I just need to get this going here. Get that out the way, click, and it's gone. Here we go. Close that desktop. Okay, we're all set. Here we go. We've got all right, I'll do the charts. Now you can see the charts live. So there it is, a gap up and gap down. So there's a little island reversal at 24,860, the high of Friday, going right into the Chapman wave inside track repellent zone. And the MACD was very strong, the stochastic very strong in the 90s. Now it's at 87.23. This is something to monitor for sure. What I'd say to subscribers, I think there's just a little more upside action possible because the S&P, it'd be really unusual not to get that leg D. I could call this, yes, in the Chapman wave parlance. You can say the 2675.47 high of 6 sessions ago is peak C1. And that what we saw on Friday was a peak C2, meaning that it barely missed an all-time, a recovery high to go to that leg D. All the technicals suggest that there should still be some kind of a bounce, but you are getting a pullback in the MACD, which is very strong. The moving average, convergence, divergence. You're looking at the stochastic now at 83%. Just a couple of days ago, it was at 93%. So this is a pretty big pullback in terms of the technicals. But so far, all that I'm looking at is high-level consolidation. If you look at the QQQ series, that is the NDX 100 trading vehicle. You're looking at a 162.11, made a peak D high at 166.02 from the 143.46 low. Pretty darn good rally of 23 points. 23 points, about 18%. So it comes 23% down, but then, of course, going up, you always have a different, you measure the percentages the same way, but because you're coming from a lower route, you're going to have a smaller, you have a bigger percentage, but a smaller point move. from the major top of 173.31. So here we are, high-level consolidation. MACD's good, stochastics now under 80% at 78%. I said to subscribers to my opening call over the weekend, we must expect from now into at least a week and a half to 2 weeks. I don't think there's going to be a major pullback yet. I think chop, 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 a really choppy rotation between different moving averages. So the QQQ, you can see we pulling back pretty sharply, gap from the high that was made on Friday, gap down. The 156 low, the decline of 152 in the IWM, the Russell 2000, 145.81 right now. It made a peak at 147.92. Everything's in place for a pullback. The only reason why I didn't pull the trigger is there was just enough residual strength, and the fact that the semiconductors screamed to 97.25 the other day after that. I think it's a bluff. That's what I think. I think I have not changed my outlook that the March high of last year was really a very important high in the semiconductor index, and that it should take about a year, about 10 months to maybe 14 months before you start to see the orders reverse from deteriorating after spectacular 2 years, start to see a turn. I don't have any proof for that. I do have a couple of rumors. I have a couple of stories. I have a couple of, I wouldn't call them inside stories because it's public knowledge that most of the semiconductor companies are having a tough time. NVIDIA came out today. I'm not sure what the story was. It was down 20% overnight. Now it's down 14% at 137.48 at 22.67. He made an unusual peak G in the Chapman wave right there Friday, going from a low of 124.50 on the 24th to one. I mean, this is a spectacular gain. 160.88 on Friday, trading now at 137. What a hit. This is, look at the monthly chart. Look at the weekly chart. It just says, I don't care what they say about NVIDIA, or what they say about the semiconductors. Everything is pointing to at least another 6 to 8 weeks of consolidation before you can really see some kind of an internal, I wouldn't even call it internal residual, some kind of sign that bookings are starting to improve. And everything I've read, everything I see just doesn't fit that. So let's go to gold. Gold is up a little bit. It's up 4.3. The high was made at 1303.70 on Friday. Talk about a spectacular move out of the blue. Not a spectacular move. You've seen big moves like this before, but just from nothing, it was there under the 14 and 9 period moving averages on Thursday, trading in the 1275 area, and out of the blue, 1303.70 on Friday, and today's high is 1303.70. Oh, did it make a new recovery? Yeah. No, 1303. Yep, it made a new. Let me just move this away. Yep, it made a new recovery high. Very good. 1303.7. I think I wrote that in error over the weekend. And here it is, exact, 1303.70. That means that the silver should be rallying, and silver is rallying at this particular point. It's rallying at 0.05 at 15.75. Not a bad move, but it's just, something's wrong with this picture. Look at the GDX. The GDX is rallying, but it is actually still under the 2154 high of the third. Hey, it's getting close. It's at 2147, 7 cents away.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, so we're looking at the GDX doing very well, making a V-shaped recovery here. And I'm pretty sure it's going to go to a leg C above 2154. The MACD and stochastic in the weekly chart are really improving. The one in the daily chart, it's a start. Technically, it looks like price got ahead. And the monthly chart has started to improve for the very first time in ages. We're looking at EUR, USD, euro dollar currency pair. Nice move up about halfway from the high that was made back at the peak F top of the 200 period moving average. That was early January. Then, of course, goes down to the 1.12 area. Now it's at 1.143, but that weekly chart is just doesn't look good at all. And the USD JPY is just stuck in that range. There it is. Yep, there it is, peak EC, and it's just kind of holding okay. I think that we need to watch this closely. The dollar still says to me on the monthly chart that this consolidation that's going on now is a needed really a breather after such a big move from 88 to 97, a 9-point move. That's 11%. You know, hey, that's pretty darn good. So monthly dollar EMA crossed. Yep. Yeah. So we're looking at this. I quite like it. I just think that this is a well-deserved break that it's got right now, just a digestive phase. I think that's what I'm looking at. You never know, because there are so many cross currents. So I'm going to be doing a webinar at some point, and the reason why I mention this now is that for the very first time, this is something I spoke about. Some of you will know I spoke about this as soon as it looked like that Trump would be electable. And I say that people are misjudging what's out there in the real country, and that if you're out here on the, I'm in Newton, Massachusetts, don't get too far more liberal than this. If you're out on this side of the world, there are, even over the weekend when I mentioned to really, really good friends, it's important for the country that the jobless rate has come down. I don't care who is president, I don't care which party is president. That's what you want. It's really important. And at the same time, They just lambasted, and I couldn't even argue with them, Trump. And, he just, it's tough. So now all of a sudden, and I related this to the Republicans of the 1920s. I said, they got in, and then you had the handing over, Coolidge handed over to Hoover the top. So it was too late for Hoover. But what really happened was, now I'm getting emails saying he's a successful businessman who never held public office before winning the presidency. He's coming into power after an electoral college landslide. He did it by beating an out-of-touch New Yorker opponent. Once in office, he launches a vast trade war, promising to stand up for America's heartland, with 890 increased tariffs in total. He even slashes immigration levels to America by 90% while cracking down on illegal immigration through deportations, targeting as many as 2 million people. Oh, you may think I'm talking about Donald Trump. No, I'm actually talking and describing Herbert Hoover, America's 31st president. Similarities between Trump and the man who saw the Great Depression happen under his watch are eerie. So I've been talking about this. It's like a broken record. And so I'm going to be putting together a webinar calling, I'm using the famous song of the 1932 period, Anything Goes, Cole Porter. I must tell you, there are tremendous similarities, but I don't think that top has begun. I think that top is still to come. And then we can start looking at comparisons. And I want to put together a webinar. I'm taking my time on this. There's no rush. My thinking. My thinking is that there is still another phase to the big coda, what I call the coda phase, still to come. I just hope for my children, my grandchildren, that I'm absolutely wrong. There's one time that I'm praying that I'm wrong, but I think that we are headed, at least based on the real estate market in the Northeast, especially in the Boston and the Brooklyn area. I think we are in for a really serious correction in real estate, and I suspect if we get that phase in the market, where the market starts to climb to new highs, all-time highs, and the public finally comes in, we could see a spectacular move up, and then a very long period where the market and capitalism are just out of touch. Are you not seeing signs of socialism just creeping in more and more and more? And maybe that's the way to go. I don't think it's the way to go, but maybe it is the way to go. I don't know. When you get 370 million people, hey, maybe it's time that you have a different thinking. I'm not sure about that. All I'm saying is let's go back to the market. So you got the dollar. We'll watch the dollar. My contention has always been that when a country economically is very strong, invariably you would see the currency be strong with it. That's what I'm thinking is with the dollar, longer term, at least for 18 months or more. All right, let's keep going here. I feel a little depressed that I shouldn't have brought that up, but you have to. You have to look things square in the face. Semiconductors, as I say, monthly chart improved a little bit, but it really doesn't look great. Weekly chart did improve a little bit, but we'll have to see, because if at any point in the next 3 to 4 weeks, if the SMHs break and close under 88, you've got to start being real careful. We aren't headed for a retest of the 80 level. All right, let's just move on. We've got high-grade copper. High-grade copper had a little bit of a bounce on Friday, giving it back today. It's up 2.68. Here's another reason why I'm a little nervous. And what about wood, which is the iShares Global and Timber Forestry, which I showed my subscribers on Friday, and I said, yep, it's holding very nicely. This is a great bounce, but you want to see home builders move with rates coming down, and we'll see if that's the case here. So wood is trading in leg D at 64.82, down 77 cents. Maybe a peak D in the weekly, in the daily. The monthly is really looking very poor, and the weekly has had a nice bounce, but it's only a bounce so far. I just want to get to crude oil. I just want to move on with these things. Crude oil right now is down 51.64. Had a peak D in the chart. Remember, D is where other things can happen. Peak D in the daily chart, just over 54, trading at 51.63. A little bit of a pullback. Technicals were good. We'll see if crude starts to trade under $50. That's a problem. All right. Now, let me just quickly look at my E-mini futures. Yep, here we go. Leg A, leg B. This is leg C. Trying to bounce. Trying to bounce in the 2-minute chart. The 5-minute chart it's nicely over the moving averages at 263, 2631. I would just tell you that nothing means anything here in the E-minis until you start to see a trade above 2640. Trading above 2641.50. Above 2641.50, I think we've made the low just for this particular move. We're going to have a nice bounce in the next few days, somehow have a rogue wave, spike to the upside, and then I think we've got to be a lot more careful as the market comes down, and probably for a longer period, not just a half a day or a day or two, but it comes down for about 4 or 5 days, or maybe even more. So we've got a break coming up here. I'm just checking this out. This is my second break. Oh, that's fine. Here we go. We got a break. Dow's down 348. S&P's down 32. Basil Chapman, Tiger Technicians Hour. Sorry for depressing you. I'll be right back with happy news.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back. Basil Chapman, Tiger Technicians Hour. Dow's down 343, S&P's down 31.9. I was asked about 10-cent TCE HY. I just never remember the symbol. That's nothing. Holdings. No, nothing makes sense here. All right, 10-cent holding, trading at 43.08, down 98 cents. Comparison of 10-cent and what was the other one? NPSNY. So 10-cent, it says here China movie ticketing platform, entertainment prices, etc. Biggest movie ticketing platform by sales and backed by internet giant 10-cent holdings. Gosh. All right. Well, I don't know much about, I don't know anything about the company. Trough A, B, rallies up, made a peak F in the daily chart above the 200 period moving average of 42.76, in leg C in the weekly chart. So I would just say this looks to me like a chart that needs more time, that it might have made the low, but a low, but it needs to establish the low. In other words, the aftershock, and that needs to hold. It's a 41 right now, but 43 right now. It needs to hold the 40, about the 39 area short term. Close below that says, hey, watch out, that 34.81 200 period moving average becomes a target in the weekly. But now let's go to the other one, which is NPSNY. And put in a P and not an S and Y, not an O. There it is. So it's pretty much the same kind of chart formation. It's actually not quite as strong. This is a Naspers Limited ADS, South African company. They own part of Tencent. In fact, they own quite a large amount of Tencent. And I'm just going to say, I would probably go with the core. I wouldn't go with the South African company, rather go with Tencent itself. Why go with a subsidiary? I can't talk about the companies fundamentally. I can just say this is failing on the right side to make the cup formation. Hasn't closed above the key 46 level. It got close, but it hasn't closed above it. And Tencent, now I'm going to have to remember the TCEHY, right? EHY, see if I can memorize that. Oh, good. Has gone to a peak F, and it did go above that high there in the cup formation, but not nearly close to the 46 level. You know what? They're very similar. I'm just going to say, keep your eye on Tencent holdings. If you want this area, I'd rather go. I'm always very nervous about Chinese companies. I just don't know if we get all the information we should. The other thing is that the rule of thumb, and I've spoke about this about 8 years ago. I told this story. Oh, do I have time? You know, today's a good day for a story. So I have a friend who had a staples business. No, wrong friend. I have a friend who's the husband of a very close friend of my wife's, okay? So he was living in London at the time, or was he living in Israel? I don't know where it is. And they were in the schmutter business. They were in the materials, all right? So he had spent a long time trying to get that business into Russia. It took a long time. He had to swig down. He couldn't even count how many little glasses, shots of vodka, but eventually he got the business and it went very well. So he said to himself, hey, I'm really good at this. China should be a cinch after Russia. So he goes to China and he takes his materials, he shows it to them, and they're interested. And they start to get all the negotiations and everything. And he's wondering why the negotiations are taking so long. And he goes back there and he goes to the office, small little office, and he's talking to these guys. And as he's talking, kind of leans over and he puts his arm on this big pile of stuff that was next to him. And he's talking away. And as he's talking, he's waving his hands and saying, you know, you guys have got all my products. How come you haven't been able to do anything? And as he looks, he sees on his, this is a true story, he sees on his shirt a kind of a pattern that's kind of a stain. And he looks and then he looks at the material. And what they've done is they've taken all his designs, and he's looking at one particular parcel, and it's got his designs, but it was still a little bit wet. And he put his arm right on this thing. And here they are. They've copied his stuff. They're already marketing him, telling him that they're trying to organize things. They're trying to get things ready. He took one look at this. He never said a word. He just said, you know, sorry, we need to discuss this a little further. And that was it. Case closed. Eventually, he actually did do business, but he had to do it through different sources. But he learned a tremendous lesson there. All right. And Peak in the Den says, I have a similar story about dealing in China. So I'm just saying to you that there are things that go on there that maybe are normal for them, but they're not normal for maybe other countries. And as a result, I'm just saying to you, you can go into this. Don't go into it blindly. Have your stops. Be ready for anything. They can make spectacular gains. This darn thing went from under 25 to over 60 in a year. Last year, the whole of last year, just spectacular run, over 100%. Just don't be fooled. That's all. Be ready. Be ready for anything. Okay, here's my little warning, a little story. Okay, I've got a couple of stories out today. So now we're done with stories. Now let's look at the different sectors. I had a bunch of questions. So yes, something. Let me just read through. Over the weekend, for those of you, all of you that did my webinar on Wednesday last week, some of the actions that we were looking at have worked out really well. I had some really, almost to a person, I had really favorable, favorable in the fact that your comments showed that it had helped your trading, even in the short little period between Thursday and Friday. I'm thrilled about that. That's to me the most important thing. That's all I anticipate to have. Thank you. I appreciate that. So I got a question here. I'm just going to try to find it. Yes, there it is. Is this the first one? Oh, yes. So the first one was on, you remember Friday, there was a question, a subscribe question. Are we going to get trapped in the semiconductor thing of trying to short and it keeps going higher? And I said, no, I'm ready to reshort, but I'm just stepping aside for now. It didn't work out because there was follow through to the upside. Now you can see the SMHs are pulling back. Nothing too serious. I mean, down 2 at 94.83 after spectacular gain. Not even into Thursday's intraday candle, making a low this morning of 93.16, trading right now 94.83. I still think there's just enough residual strength on the MACD and the stochastic to say you can chop around, and that's what I'm saying. I think choppy over the next week and a half, 2 weeks, and then coming into February, I think a lot of all of this hits the fan. I think what's going on, we start to see a lot of worry about, is Trump in control? That's the next phase that we're going to go through. Is Trump still in control? Has he been taken by Nancy Pelosi and Schumer, who handled their side of the bargain? No bargain. They just handled their side of the deal in fantastically. You've got to give everybody credit for what they did right. They did it right for what they wanted. Trump did it wrong for what he wanted, and that's, you got to face that. And I think the market is going to, I'm only talking about this, not politically, I'm talking about it market-wise. If I think it's going to affect the market, I will talk about it. Now is up, 340 will be right.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, a bunch of questions. So Square is one, the Dan that we got. I like the way that it's come off the low. I think it needs a little time. I go into at 75.61, coming off the 49.82 low. That is a spectacular gain, but I don't want to see it break under 72 to 71 support. If it goes under 71, that starts at H pattern. I prefer not to see that. So let me just say, if you are in it, keep holding it. But if you aren't in it, just text me or let me know what you're thinking. But at 70, just right in there. If it can hold 73.80, 74.10 to 73.60, and hold that without really, it can slip down once, but it has to come right back again. Let's see if it can make the cup and handle formation for another move to the upside. Under 71, it's a real problem. So Square is in the running. I think it's had a spectacular move off the low. It has got dropped over 50% from 101 to 50. This is a really nice bounce. So if you're holding it, keep holding it. But I'm looking at it as if to say, this is one that you want to keep on your radar. This is maybe one that you want to be adding to in increments, but you do have to have a lot of tenacity, because if this starts to break, if this single leg A starts to fan and it goes under 75 right now, but over the next month, if it starts to trade under 68, that's a real problem. I mean, let's say 67, 68, somewhere around there. That could be a real problem. So this is a very important moment. I like it. I like the way it's come back. It's telling us it's in play. Jim wants to know about USO. USO, what's the question? How does it track versus crude at peak D? I was looking for C to D and USO and wanted to add to my position. So, Jim, this is what I'm looking at. You see, USO is the United States Oil Fund. It went to a leg C because it missed the low. If you look at crude oil trades pretty much all day, except for some periods of the weekend. So it came off the low already. Let's put it this way. It made a low of 42.60 on the 24th. Already on the 26th, it had a little gap to the upside. USO, you had to wait because it made its low the day of the 26th, where the market kind of rallied and then failed to went to a lower low, and that's exactly what USO did. Technically, this should be a leg D, the same, but it didn't trade. It was only trades between 9:30 and I believe 9:30 and 4:05, 4:15 maybe. So there's a difference. Now, as far as a new leg up for a leg D, you have to consider that it's already done leg D based on crude oil, even though because I want to go to the root. The root is crude oil. But I do think that oil itself should have another bounce in this choppy phase. It should have maybe, I'm looking for those of you who did my webinar, remember on Wednesday I did a little thing, I showed you what the rogue wave looks like. I'm anticipating a rogue wave sometime this week. There's a chance, let's put it this way, that there's just something like maybe two of the big earnings reports are very good, and it creates some kind of maybe a tech rally or whatever it is, and you get this push. The S&P manages to push and actually does make that D. If you look at the ESH 19, that's the equivalent of crude oil, right? But that has the same as the S&P. It made a peak C at 2677.75. So here it's the same. In crude oil, it's a little different. But my thinking is that there's enough. I don't know if they make new recovery highs, but there's enough impetus here for just a sudden upside out of the blue punch. There are so many people that have missed the big move from the lows that were made in late December, early January, and only started getting in last week, and now all of a sudden you got the big pullback, or it feels like a big pullback. Well, I suspect they're going to have another invitation to get in, and then we've got to look for an overbought condition that takes the market down to a lower low than it sees this week. I think that's coming up about the second week of February, and that would coincide with really tough negotiations. If there are even negotiations with Trump, well, who's he going to negotiate with? He's done. He had his chance. The Democrats, they're moving on. You won't even hear border wall. You won't even hear talk about this. They'll move on to a new subject. I mean, Trump missed whatever he was going to do. I think he missed a huge opportunity to do it. Whether it was right or wrong, I'm not interested. I'm only interested in the fact that I'm looking at negotiations. And I think he's missed that opportunity. You cannot again close the, you shut down the government one more time. That's not good. Not only isn't that good, that this market will really start to take on water. So I don't think that's going to be. He's going to have to make some other negotiations, and he's going to have to get himself in the good books. And the only way he can do that is through the stock market. He's made himself Mr. Stock Market. You remember Obama had the most spectacular stock market. Always was embarrassed to even mention the word stock market. I don't know what it is. He could never do it. So, and Trump owned it right away. Yeah, that was his. So this is going to be his baby, and that's going to be the big thing. That says to me, he's going to do whatever it takes to try to get this market to move higher. So here we go. Next thing I want to talk about, yes, the IYT, here come the questions, the transports, peak C. You know, when you come from a major decline, you don't have to go to Ds. It's just that the technicals all around are so good. I don't see any reason why there shouldn't be a sudden pop to a D after the peak C, third highest peak in the Dow IYT, iShares Transportation Index, 180.34. We're trading at 177.59. It's going to have to take a little bit, but it's gone from 155 to the 170. Oh, wow. To the 180 level. That is a big move. Okay, next thing I was asked about. Wait, somebody asked me something and I missed it. Then another. This is like a statement. Let's see. Krone, buy and hold. You make a killing. Yeah, sorry, it's my fault. I take full responsibility. One of my subscribers. What a perfect example where you picked a great stock using the Chapman wave at $6, but using tight stops and a short-term mindset, subscribers missed out on a 300% profit. Why not buy and hold some of your speculative specs? Think about how many have been stopped out and so much higher later. Sure, there's a lot to be said about a buy and hold the next generation of growth stocks. Yeah, I don't disagree. And I am trying. You can see I'm trying my best. We've got some stocks, even today with this pullback, we've got some stocks that have held fantastically. All I can say is I'm doing the very best. You know, we might not have Cronus anymore, but we did buy the MJ. I've spoken about this. This is leg C. We're in at 29.88 and it's trading at 33.20 right now. Really nice move. Yeah, and as someone in the den said, you also have to use your own discretion sometimes with the opening call stocks. Yeah, there are people I know that have used it, did their own analysis, didn't need to have tight stops. You know, I don't feel comfortable when one of our positions is down 20% or something. it's really tough for me. I put myself in my subscriber's position and I say, wow, what if they were holding off? They've just joined and now they're holding off and finally they get the stock and it's down 20%. Hell, it's tough. So I keep thinking that maybe I need to think differently. We have used wider stops lately, and what can I say? I'm doing the best I can. I'm trying to cover people who are total professionals that I have as subscribers, and I have people who really are just beginners. Doing my best.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
We're on so peak D in the 2-minute E-mini chart at 2632. Let's see what happens. Yeah, just make it clear. 2641. That's really a nice. We might have made the low for the next 2-3 days. And it could start to have one of those rogue waves to the upside. But if it fails to do that, we could be here for a little longer. I still think that the big move to the downside has to wait another week or so. And I don't think, when I mean to the downside, I just mean a bigger move in the consolidation. I don't mean back to the low that was made in December. That's going to take unbelievably bad news. I think that unbelievably bad news can wait a little bit longer. A question about the XPD. I'll look at the IAI, which is the ETF. Oops, the wrong one. IAI, which is right here, trading at 60.67. This is the iShares broker dealer and securities. I don't see how you can get such a nice move from the low of 51.96 to 61, 10 points, almost like a 9 or 10% gain, even though it took a whopper of a decline from the upside of 70.58 to the 51 low. I mean, that's huge. But this is the dealer broker area. this should be tanking right now. So the fact that it's holding says to me, we've got to consider this as possibly some kind of internal low. We're waiting for the residual low still to come. I'm kind of impressed. It got repelled at the 200-period moving average. Yep, that's important. So, yeah, that's what we're looking at. So I'm looking at, let's see, what happened to alarm, ALRM. See, this is what happens. I like this stock. I said it's going to go to an all-time high. This is the kind of thing that's going to really tell us a lot about this market. We got in and out. This is the one, right? I'm pretty sure we got in. We were very small loss, way down near the lows, and then it just kept going higher. I had to have, because it was a $50-something stock. I didn't want to have an 8 or a 10% correction on it. You just either you got it right or you missed it. So this is one look. I made an all-time high. Alarm.com holdings. There are a lot of stocks like this. I was looking at them over the weekend. I thought I'd do them today. I'll do them tomorrow. ENTG, XLNX, ATTU, Cyber. This is a whole bunch of stocks. All right. Basil Chapman signing off. I believe, yep, signing off. Handing you over to Steve Rose, handing you over to Dave White, handing you over to Tom O'Brien. I'll be back tomorrow. Check out my opening call. I hope you'll find it elucidating, illustrative, educational.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.